Hey everyone, what's happening? In this video I'm going to talk about the 7 do's and don'ts of trading in a small account. Much like trying to make a business out of a small food truck, like this one right here, it's certainly more difficult than a full-size food truck. So trading in a small account, it is not the same as trading in a big account. And there are some important considerations that you need to make if you're in a situation where you're trading in a really small account, whether it's $500, $100, or $1,000, or maybe $2,500, whatever it is. If you've got a small account, this video is for you. Now, to inspire you a little bit, I'm going to start a new small account challenge next week. And I'm going to put a link right down in the description where you guys can check that out. For those of you watching this maybe 3 weeks from now, or a month from now, or a year from now, that link will get updated so you can get info on whatever's coming next. So maybe it's another small account challenge that I'm doing down the road, maybe it's something else. So check out that link if you want to learn a little bit more about getting started, especially with a small account. So let's start breaking it down here. And before I do, let me just reiterate as a reminder to you guys that in case you didn't know, my results are not typical. Most beginner traders lose money. Most traders struggle, and it's because trading is very difficult. All right, so I don't want you to think that you're going to jump in and start making a ton of money on your first days or weeks with a small account, because that would be an unrealistic expectation. So I see some people tuning in here to the live feed. Thank you guys for tuning in. I'm gonna go let the dog in the house, and while some people filter in, I'm also gonna do Q&A, so you guys can start typing some of your questions right down below. All right. Awesome. So you started with $100? Good for you. That's a very small account. How much do I risk on each trade percentage-wise? I will share that with you. But let's start with the first of the 7 do's and don'ts of trading in a small account. So the first one is don't swing for the fences, try to hit home runs, or buy way out of the money option contracts or penny stocks that have a 95% chance of being worthless. That, to me, is something that a lot of people have been talking about in the last year or so, especially on something like GameStop. You know, putting $100 on an option contract that's so far out of the money, with the hope of turning that $100 into $5,000, $10,000, or $100,000. That's a lottery ticket type of trade. 99% of the time, those trades will expire worthless. You will lose 100% of what you've put in. It's swing for the fences, Hail Mary, home run pass. Sure, when it works, you feel like a hero, but the majority of the time, you're going to be a zero on those types of trades. So if you're actually trying to start a career as a trader, potentially, swinging for home runs is not the way to do it. So number one, don't swing for home runs or put all your money into some way crazy trade, whether it's a penny stock that you think is going to go to $100 or it's a option contract. That, to me, is gambling. And if you want to gamble, there's things there you can go gamble, but if you're wanting to be a trader, you can't focus on gambling. You can't be trying to turn this tiny account into $1 million overnight. That's not going to happen. Yes, next week I will be streaming live as I get ready to do the small account challenge. So every day next week I will do my live watch list for you guys, so you'll be able to tune in for that. Those watching this a few weeks down the road or a few months down the road, I may not be doing that right now, but again, check out the links in the description. If you want to download my ebook, you can check out my ebook. I've got a new guide to getting started trading. You can check that out, or you can just come over to my website, warriortrading.com, and you'll check out a ton of the resources and things like strategy, terminology, and all these guides that we put together for you guys who are wanting to learn more about trading. All right, so if number one is don't swing for home runs or go for Hail Mary passes, then number two, do take 5 or 10% base hits. Now, the problem that so many people run into is they say, man, I've got a $500 account. Taking a 5% base hit or a 10% base hit, that's only $25. That's only $50. What's even the point? That's not enough money. I'm looking to get rich. And we'll talk about that in a second, because that's not a realistic expectation. My opinion, and this is based on my career as a trader, so take it for what it's worth. My results are not typical. I haven't had a typical experience trading, but what has worked for me has been focusing on base hits, day after day after day after day. So 5% a day, 10% a day, perhaps, on each trade. It doesn't necessarily mean the account is growing 5% a day, because I may not put the entire account into one trade, but focusing on these base hits is much, much, much more obtainable than trying to swing for home runs. So for every home run, where you bought a stock at $1 and you hoped it would go to 10, well, there were probably a lot of times where it might have gone maybe to, $1.50 or $1.25. And that could have given you a nice base hit. And if you were holding for that home run, you might have let it come all the way back down to zero, right? All the way back down to flat. So taking those base hits, lock it up, and then look for the next trade. And that also gets you into the habit of trading more frequently. Number three, don't change a profitable strategy that you may already have to accommodate fees or commissions that a broker might charge you. This is a really common mistake that traders make. They say, well, listen, the way I trade, let's say in a simulator, I make money in a simulator, but I buy a stock, at $5, and then I add it $5.10, I add it $5.25, and then, I sell half at $5.50 and another half at $5.75 and another half at $6. So all of that is, 5 or 6 individual trades. If I'm trading with a $500 account, all of those trades at, let's just say, $5 a trade, now I'm spending $25, $30 just on commissions, and the trade only had a potential to make $50, which would have been 10%. So traders will get into the habit of changing what is working to accommodate a small account. And one of the challenges with a small account is that usually your commissions are a disproportionately large percentage of your profits. My opinion is that I have a strategy that works, and it does involve being very active, getting in, getting out, getting in, getting out. And so since I have this strategy that works, if I'm going to trade in a small account, why would I change a thing? I really shouldn't change anything. I should just do exactly what I've been doing. Will commissions be a larger percentage of my profits in the first couple weeks? Sure, maybe they will. They probably will. But as the account grows, then those commissions get smaller and smaller and smaller, to the point that where they are now, which is that they're a very small percentage of my total profits. So I will probably trade a little bit less in the first 2 weeks of trading in a small account. I won't trade differently in terms of how I execute the actual trades, but I won't take as many trades in total. And the reason for that is because during the small account challenge, I have to focus on the highest quality trades. Less is more. So I'm going to focus on the highest quality trades, which means I might only trade once or twice a day in my small account each day. So I might take 1 or 2 trades a day, and then I'll put the small account aside, and then I can trade the rest of the day in my main account if I'd like to, if there's other opportunities, right? But for the small account challenge, less is more. So I'm not going to change the way I scale in or scale out. I'm not going to change my hotkeys. I'm not going to really change anything. I'm just going to trade the very, very best quality setups each day. So the only thing I'm adjusting is the quality standard. And that's because in a small account, if I start to have losses, I just won't have a lot of room before I'm going to have to add more money into the account. So the fourth of the do's and don'ts of trading in a small account is to prove profitability in a simulator before you trade with real money. This is a problem that a lot of traders, they get overexcited and they jump into the market with real money, and as a result, they lose because they've never traded before. They don't even understand necessarily how to execute trades, what routes to use, how to set up their hotkeys. They're just throwing money at the market. And in my opinion, while there's something to be said for learning by doing, and there's some value to that, one of the problems is that you will lose money in that process. So learning by doing is fine, but in this case, there's an alternative which is just as good, which would be to trade in a simulator before you put real money on the line. So if you trade in a simulator for a week, for a month, maybe for a month and a half, and you've proven, not just with one home run, but you've proven through a series of 5 trades a day and several weeks of trading that you actually are consistently profitable. Then you're going to go into trading with real money with so much more confidence. And confidence is important because we know that part of being a successful trader is mindset. So having the confidence that you are a profitable trader, it sort of makes you more likely to be profitable, which is frustrating because, well, how do you possibly get that confidence if you're not already making money? And you get it by practicing in a simulator. All right. Number 5, do not use leverage or margin if you don't know how it works. We've heard these horror stories of people on Robinhood and various other brokerages using leverage on a trade, which means they're trading on borrowed money, and then they lose it, and now they're not just at zero, they're in debt. They owe their broker that money. That's a huge risk factor. You do not ever want to be in that situation. So if you don't understand how leverage and margin works, you should not use it at all. Now, for someone like me, I understand how it works, I understand the risks, and I'm willing to take those risks. I can also afford the losses. So I'm in a different situation. So you may see me do something like use leverage or margin, which is not for beginners, but something that works for me. So be very, very mindful about how you use leverage or margin. All right. Number 6, do fund the account with a little more money than you need to give yourself a cushion. So if you're planning on funding a $500 account, see if you can stretch it to $700. If you're planning on funding it with $1,000, can you stretch it to $1,200 or $1,500? If you're going to go for $2,500, can you get it up to $3,500 or $4,500? Can you give yourself a little cushion? Because if you have the misfortune that your first day or your first 2 days are red days, that happens, that's part of trading. But you want to be able to not right away be up against the ropes where you can't trade anymore, or you have to go and fund the account, or you get maybe in one instance you could get your account auto liquidated where you go below the balance and then you just close out your position, and so you didn't even have any room to work. So for instance, if you have a broker that has a minimum account balance of $350 and you fund it with $350, the second you get into your first trade, just because of the spread, if you buy a stock at $550 on the ask, the bid is probably $545. So if it drops down even 1 penny, you are below that brokerage's minimum account size, and they will liquidate your positions. So you don't even get a chance. Your only chance would be that you got in something and it was immediately going up while you were getting in, which we would love to have happen, but that's just not the reality. That's not how it always works. All right, so number 7, do not expect to get rich quick or generate any significant income from a small account. Do it for the enjoyment of learning the financial markets and for learning the skills of what it takes to be a trader. And as proof of concept that you're understanding how to do it so you can fund a bigger account. So let's get back to the food truck. Now, running a business out of this food truck right here would be extremely difficult. But could it be proof of concept? Could I bring this food truck right here down to the farmer's market and sit inside, and could I sell baked cookies out of the front of it for $2 each or something like that? You know what? I bet I could. And I bet a lot of people would line up because this thing is pretty cool. So that could be the proof of concept to begin to reinvest. Right now, if I go down there and it's a flop, I sell no cookies, then okay, this all costs me a lot less than the full food truck. So that's the whole idea with doing a prototype, doing that proof of concept, just testing it out. Does this even work? Now, I don't have a hot kitchen in here. In fact, I don't have wheels or even an engine. But, and I don't have a license. In this case, you probably need some type of license to serve food out of this. I don't know. I'm not really sure. With trading, fortunately, the barrier to entry is pretty low. In fact, it's a lot lower than a food truck. I mean, it truly is. This is just like being honest. Now, if you were going to talk about which had a higher likelihood of turning a profit, a food truck or a trading account, you'd probably have to say a food truck because we know that the vast majority of traders lose money. But I don't know what the metrics are on food trucks. Maybe the vast majority of food trucks lose money too. But we know that getting a truck, painting it like this, and doing it all up, I mean, that's got to be like $50,000 at least, maybe $75,000, $100,000. So what's the startup for a trading account? The startup capital, it certainly could be as little as $500 for a prototype. But if you're actually going to try to make a serious go at it, probably more like $5,000, $7,500, $10,000. You got to make sure you've got a computer. You've got to make sure you've got good internet speed. So there's some upfront costs. Maybe you buy a couple extra monitors, things like that. But all in, I mean, right now, it's hard for me to say because my experience is so unique. If I went in right now with maybe $2,500 in computer equipment, a computer and 3 monitors, with $200 a month internet service, and a $5,000 trading account, I don't have any question that I would be able to very quickly turn that into $25,000, $75,000, $100,000, and then just be smooth sailing from there. But again, my experience is not typical, so it's hard to say what your most realistic startup costs would be for trading. And given that most traders lose money, you just know that you're coming into something, where you've really got a bit of a headwind. So maybe let's talk about that for a second. So I hit the 7 do's and don'ts of trading in a small account. I wanted to kind of get those at the beginning and then do a little Q&A here and remind those of you guys tuning in, and I see you on YouTube. Thank you, everyone who has tuned in and hit that thumbs up. Looks like over 20% of you have hit the thumbs up button, which is awesome. So if you haven't already, hit that thumbs up button. It takes like a second. So I want to remind you guys that next week, so I'm starting my small account challenge in 1 week. So a week from Tuesday. So a little over a week. But next week, to get you guys excited for the small account challenge, I'm going to live broadcast my watch list every morning right here on YouTube. So if you're not already subscribed to the channel, make sure you subscribe. That way you get the notification when I go live. I do, last year I did live broadcasts every morning for it was like 6 months when we were in COVID lockdown. So, I do have periods where I stream pretty regularly, and then I have other periods where I'm traveling and not streaming as regularly. So I've been traveling for sort of the first part of the summer. I'm going to be here for a little bit for the small account challenge, and then I'm going away again in August. So anyways, so make sure you tune in here for that. And then, let's just hit some Q&A. And I guess the reason most traders fail. So why don't you guys throw out a couple reasons that you think traders fail? Why do you think most traders lose money? I can give you a couple of reasons off the top of my head. The first, and I've met so many people over the years that have talked to me about trading. The first is that they come into the market with no experience, which was the same as me. I came into the market with no experience, basically. I mean, I knew a little bit about the market. Some people come in and they don't even maybe know what a stock is. So I guess maybe I'm taking for granted what I knew coming into it. But I came in without a lot of knowledge. I certainly wasn't I wasn't like I didn't have my license. I never worked at a hedge fund. I didn't have like any of that financial education. So I came in and I was overconfident, and I threw money into the first penny stock that I heard of, thinking that, I would make a couple $1,000s on it. And the worst thing happened to me, which is that I made money. There's a joke that I heard someone say. So the question is, when you go to have you ever what is it? When you go to Las Vegas, are you lucky? Do you have good luck? And he said, yeah, I have good luck. I've never won. And that's good luck, because when you start winning, when you start making that money, you start getting a little greedy, you get excited, you start to get overconfident. And it might, in trading, just be pure luck that your first trade is a winner. Some of my first trades were winners. Pure luck. But that got me hooked. And then I started sort of chasing the next big winner. But I didn't know what I was doing. And I started losing money. And I lost, on one trade, I lost like $15,000, and it was devastating. It was, for me at the time, it was devastating. And at that point, I was like, wow, I've lost this much money. I can't walk away from this until I've recouped that amount of money. And so I got myself off to a start in trading of this emotional roller coaster of trying to recoup losses and feeling guilty about how stupid I was to have lost so much money on a penny stock. And so my first 18 months was just a lot of trial and error. And so for me, I was able to afford to continue trading. And that was partly because I was younger. I didn't have kids. I didn't have the things that maybe cost people a lot of money and for someone else might force them to say, listen, I can't keep doing this, not making money. I got to go get a real job. So I think that one of the second leading causes of failure, if the first is overconfidence and jumping into the market with no strategy or skill, then one of the others would be the fact that they cannot afford the learning curve. They can't afford to get through the learning curve of not making money. A year and a half, 2 years, or even 3 years of not making money. Think about how much you're learning during that time. If you have an apprenticeship, if you're in, a residency and, you've gone through med school, your first few years, you're not making a lot of money at all. You really aren't. But you're gaining knowledge, you're gaining this skill. And at least in that career, that has a higher likelihood of translating into something long term. With trading, there's no guarantee of that. But at the same time, you recognize that the more you learn, the more you practice, and the longer you can keep your head above water without blowing up your account, the longer you can keep your head above water, the better the likelihood that at some point you're going to learn to swim. That's not really based on a lot of statistics. That's kind of just based on my feeling of the learning process and how it worked for me. So I was able to afford to keep my head above water for a long period of time while I was practicing and making mistakes, but learning from mistakes and so on and so forth. Now, I would say another cause of failure is lack of aptitude and perhaps lack of actual emotional and actual intelligence. There are people that I've met out there that you can kind of tell do not understand the market at all and are just do not seem to move at a level where they could even maybe ever understand it. And there requires it's looking at the market, it's kind of like a mirror looking back at you. And it's going to tell you whether or not you're actually fit for this. There is some basic level of intelligence, both book smart, but also emotional intelligence that's required to be able to be successful. And not everyone has it. And that's something that you've got to kind of learn, from your own experiences about, is that the barrier? And I see some of you guys commenting on FOMO, the fear of missing out. Absolutely. I mean, but that ties into emotion. So the type of things that, and this happened to me even on Friday. So on Friday, I was up $44,000 on the day, which is phenomenal. But then I lost 16,000 on my last trade. So I was up only 28,000. And I was feeling like, man, I'm only up 28,000. This sucks. I can't believe I just lost 16 grand on that trade. And the trade I lost 16 grand on, half an hour later, it had gone all the way back up. So I stopped out, and then it went all the way back up and made new highs. It actually went up like $4 a share without me. And I was like, my God, I cannot believe I'm the guy that lost that much on that stock only for it to go up without me. Maybe I should get back in. Maybe I should try to get back that 16,000 I lost. And it took a pretty high degree of emotional strength and discipline to say, it's not worth it. It is what it is. And I'm grateful for what I have. And actually, truly be grateful for that 28,000. Is it 44? No, but it's 28, and that's a fantastic day. But chasing that win, trying to get back that loss. Next thing you know, I could go from up 28 to up 22, lose another 6 grand. Then from up 22, another trade, I lose 10 grand. Now I'm up only 12. One more trade, now I'm up only 3,000. Then I check my commissions and I realize I've spent $2,000 in commissions over trading, revenge trading, and I'm really only up 1,000 on the day. And then I realize I've gone from up 44 to up only 1,000, and I'm livid. I'm furious. And now you've started this emotional sort of feedback loop that gets bigger and bigger and bigger. Learning to recognize that that is a trap that so many traders fall into, and learning to see it coming and say, I'm not falling into that today. It's so important. Now, the fact is, I will still at times fall into that trap. I'll think that I'm better than that, that I can try to get back. Maybe I'll make back a little bit. I can try to take one more trade. And sometimes I'll finish the day back up, 35, 38, or even 40 or 50. I'll be back to my highs, and I'm like, okay, I guess it worked. But on those days where I start slipping lower and lower and lower, I have to cut it before I give it back. What is a very common experience for beginner traders, I would say sort of this is a typical learning curve for beginner traders. They start trading with real money, they make a little, then they start losing quite a lot, they get frustrated, they get disappointed, and so they're like, okay, I need to trade in a simulator. They stop trading with real money for a little bit, they're down in the account, but they trade in a simulator for a while. They trade in a simulator, they start producing some profitable metrics, and they're like, okay, I'm feeling good about this, I'm going to flip back to real money. They go back to real money, they maybe have some good trades, they start to get their groove, they have like 3, maybe 4 good days or whatever. This is sort of, a story, but I'm just kind of telling you sort of what I've seen happen. And then on day 5, they all of a sudden are down everything they made in the last 4 days. And rather than just cut the loss, they refuse to give back those 4 days because those 4 days represent emotionally that I'm turning the corner. I've actually got something. And taking that away is even worse than the money. And so rather than just cut the loss, they then hold and average down. And then in that day, big loss. Back to the simulator for another month. Good month, good, decent month. And then back to real money, and same thing happens again. And you know what? That's what happened to me when I was learning. I didn't flip back and forth with a simulator, but I would have 5 days, 8 days, 10 days of decent trading. And then I would have 1 day where I'd give it all back. So 10 steps forward, and then, 10 steps back in 1 day. And it was so devastating. And then I would, what I would always do is I would sit down and say, where did I go wrong today? Where did things go off the rails? And I would look at my metrics, I would look at what I had done, and I'd usually be able to say, I should have walked away right here. That should have been a red flag. And the more times I saw those triggers and ignored them, but recognized them after the fact, the better I got at seeing them as they were coming towards me. And so what started to happen for me as I turned the corner is I would have 10 green days or whatever it was, not necessarily, but 10 decent days. And then I'd have 1 day where it was starting to go red, and I would say, you know what, I'm going to stop it right here. So instead of having given back all of the profit of the last X number of days, I would give back maybe 25% of it, maybe 30%, maybe 50%. And then I would start building again. And then inevitably, another 10 days out, 15 days out, I'd have another red day. a couple, maybe 2 red days, and I'd give some back. But for me, it went from sort of being on this curve, I'll just kind of go like this, of sort of up and down, up and down, up and down, up and down, sideways, to up and then down, but not quite as much, up a little bit more, and then down, up a little bit more, and then down. And it was sort of this really slow ramping back up. And one of the things I've talked about a lot was my turning point was one of the last times I blew up a small, well, it was a $25,000 account, but I took a $5,000 loss. And it was the beginning of August. And what happened was I had a goal of making $5,000 that month, $1,000 a week, right? So if I could make $200 a day, $1,000 a week, $5,000 a month, that for me, that was all I needed to live comfortably. I didn't need hundreds of thousands of dollars, just $50,000, $60,000 a year. I know but that was my goal at the time. And so in the first week, and I think it was a Thursday or Friday, I just had a trade. I don't really remember the trade, but I just had a day where things went off the rails and I lost $5,000. And so I was down $5,000 and I was devastated because my account was like right at, I think it was like 25 or 26,000. So now it was down at like 21. I was below the pattern day trader rule, the PDT rule. So I wouldn't be able to day trade, and this was years ago before I even knew about offshore brokers. So I wouldn't be able to day trade until I put more money in the account. And so that night I poured over all my trading metrics and I was just looking like, man, what is going on? Why does this keep happening? And what I realized was that the greed, chasing those big winners, had me trading a lot of really risky stuff. I was trading a lot of like breaking news. News would come out and I would jump right in it. Sometimes you'd hear news come out, like let's just say you heard news come out that like Warren Buffett takes a stake in, Bitcoin or something like that, something crazy like that. All of a sudden, that the market's going to react to it. So some breaking news headlines, really get the market going. And so I was kind of always looking for these headlines because they could produce bigger winners. And I lost sight of the fact that for me, my consistency was on stocks that had a few things in common. They usually had high relative volume. They usually were gapping up pre-market, which is why that pre-market watch list is so important. They usually had, some type of catalyst. Not always though, but usually some type of catalyst. They were usually priced between like $2 and $20, a little lower price. They usually had a lower float, and usually they were the leading stock in terms of percentage gainer on the day in the entire market. And that meant that a lot of people would be watching that stock. And if I just focused on those stocks and stopped getting distracted with the shiny objects over here and there, I realized I would actually do a lot better. And so I got myself to be more disciplined on trading what I believed that I knew would be more consistent. And that was the beginning of the turning point for me. Now, it didn't mean that I didn't still have occasionally, a big loss, because I did. But the space in between those big losses was longer because I was focusing on stocks that for me just seemed to be easier to trade. And the profits were beginning to accumulate. And so, that was my learning curve. And that was stretched out over a very long period of time. So I believe if you're a trader out there who says, every 6 weeks or every month, I seem to give back my entire profit of the previous month, you are not alone. And the fact that you had 2 weeks, 3 weeks, 4 weeks of generating profits, that to me tells me that you're learning something, because that can't just be luck. If you have 3 weeks of trading every single day and you've got profit from it, that can't just be luck. There has to be some skill in there. So now what you need to tighten up are the red days. Get them smaller. Spread them out as much as possible. They will still happen. Listen, a week and a half ago, I had a 17-day consecutive green streak. In those 17 days, I had made about $350,000. I'll say again, my results are not typical. And just for the heck of it, I'll put up my disclaimer here, and just as I begin to tell this story. So I made $350,000, give or take, in those 17 days. And I was kind of trying to set a new record of consecutive green days. That's what I was thinking about. Consecutive green day record. How many green days in a row can I have? And so when I, on the Thursday, took my first trade or whatever it was, and I was down 10,000, I was like, this is not good. Being down 10,000 after making 350 grand is insignificant in percentage wise. It's like 2% or whatever. It's not a big deal, but I was not willing to stop there. I said, no, I refuse to stop there. I'm going to keep trading. And next thing I knew, I was down 15,000, 20,000, 25, and then I took a big trade and lost on that big, and I was down $37,000 on the day. I fell into the trap. The next day I lost 25,000. The day after that I lost 8,000. 3 red days in a row. And in those 3 red days, my losses were 37, so round up to 40, 60, 65, 63. So it's about $70,000. $70,000 in 3 red days. I talk about these numbers. These are big numbers. You shouldn't assume that you'll be trading at this level. You may never trade at this level. I have a willingness to take a pretty high level of risk. Some of the trades I take in terms of amount of money on the line will be hundreds of thousands of dollars in a trade. Now, you'll see me when I do the small account challenge. I'll obviously scale that down, and I expect, based on the last small account challenges that I've done, that I'll be able to find profit through the small account challenge with smaller size. It'll be smaller profit. But yeah, so I do trade aggressively. So being down 70,000 is like whatever, it is what it is. But in those 3 days, I gave back about 20% of the profit from the previous 17 days. So 17 really good days, and then 2 big red days, 3 red days. And now I've gotten myself already back to high of the month in the last 4 days. So I recouped the losses pretty quickly, which is good. But red days will happen, and they still happen even to me. So let's see. All right, so let me do a little QA. The thing for me is once I start to get into that kind of aggressive mode, I will start chasing low quality setups, and it's like this isn't the market to be chasing low quality setups. This is the worst thing I could be doing, but I do it anyways, and I just get more and more frustrated, and it just turns into a downward spiral. By the way, I should say I do not trade other people's money. Anyone that puts comments down below of like, hey, some people make imposter accounts of me all the time, every day. And they say, hey, send me your money, I'll trade it for you. My name is Ross Cameron. And I do not invest money for any of my students. I will teach you the strategies that I trade, but I do not invest for you. So anyone making that claim or pretending to be me and messaging you, that is a imposter, and they're going to ask you to send Bitcoin, and you'll never get anything back. So just be mindful of that, FYI. Public service announcement. So, let's see. So the gamer stream says I turned $50 into 6,000 and then into 25,000, and then found Ross and have become a very disciplined day trader. I owe a lot to Ross as a lurker here for years on the YouTube channel. Thank you for saying that. Good for you. You deserve a pat on the back. $50 is a tiny account. It's great. So do I swing trade? The answer is no, not really. Here's the challenge with swing trading. While it's appealing for people that are still working, full-time jobs and can't be sitting in the market, it's really hard to generate like historical data on your strategy with swing trading, because each trade takes days, or even weeks to unfold. So it could take like a year of sort of simulated trading, swing trading, to really know whether or not you're profitable. And then of course the market's always changing. So you might have been profitable swing trading this year because of GameStop and AMC in a simulator, and then you switch with real money and we don't have those types of moves, and then you're not profitable. So swing trading for me feels like it just feels to me at this point a little too difficult to really have a high degree of confidence in, based on just the challenge in the market. sort of the uncertainties in the market. That's just my opinion. If you, not to say that you won't see some nice traditional patterns, but when you get into doing that on large cap stocks, it requires more money. So in terms of swing trading small cap stocks, that's where I think there's always going to be a bit of a challenge. So so the small account challenge I'm starting next in about a week is going to be with $2,500. I won't be broadcasting live on YouTube for the whole for the small account challenge. I just will be broadcasting that to my students at Warrior Trading. I will broadcast them next week as we sort of get ready for that challenge. My students already know which broker I'm using. I'm not going to talk about that broker in this video because my suggestions on brokers change from time to time, but my students know which broker I'm using. Nice, Ashton. It's all about following the rules. He said, you've inspired me to trade better and to follow my rules and follow my trading plan. If it wasn't for you, my account would be nowhere. Thank you. Well, you're the one there pressing the button, so you give yourself a pat on the back. Can I turn $20 into $1 million? I don't know. I mean, $20. The problem is the type of brokers. I mean, I don't even know which brokers would open an account for you with $20. The challenge would be the first. I would say the challenge would be the first $500. Getting it up to 1,000. That would be the challenge. Once I'm above that level, then it wouldn't be too hard. So increasing position size without being scared. So that's definitely an emotional conditioning issue. If you're typically trading with 1,000 shares, going up to 5,000 that's 5 times bigger position size. There's a lot more risk on the line. It's going to be more stressful. So increasing slowly is, in my opinion, the best way to do it. So going from 1,000 to 1,100 to 1,200 to 1,300, 1,400, 1,500, just 100 shares. And it may take weeks, but that's the best way. Next thing you know, you're trading with 2,000 shares and it's like no big deal. For me, I'll have days where I have 28, 35, 40,000 shares and it doesn't, depending on the stock. Obviously, if I did that on GameStop, I would be stressed out. But on a lower price stock, it doesn't stress me out really. Let's see. So if I trade, for example, 1 million shares in one day, and it shows 6 trades on that day, then let's just say 10 trades. If it says 10 trades, just to keep the number easy, then that means I bought 50,000 shares and sold 50,000 shares. So that means I traded 100,000 shares in one trade, and then I did that 9 more times. So whatever your total number of shares is, as long as if you're a day trader, then it means you bought half of that amount and you sold the other half, right? So both your buy and your sell count towards the number of shares you've traded. Thank you guys for tuning in. Thank you who have hit the thumbs up or shared this video with a couple friends. Looks like we've now got about a little over 30% of you have hit the thumbs up, which is great. Thank you guys for doing that. So options, well, I have traded options over the years. I don't gravitate towards them because here's the thing. There's an opportunity cost. You can only focus on so many things at once. And while there is certainly an opportunity to trade cash secured puts or covered calls, which or spreads, which would be my two favorite my favorite type of options trading. Those would have a higher degree of producing profit for me than trading far like out of the money calls or puts. The amount of buying power that's tied up to take those trades is usually significant with a put spread or a cash secured put, for instance, unless you do it as a spread. And then you just have the challenge of, okay, how much money is this actually going to produce, and how much focus am I putting on it And that's taking away then from the ability to focus on something else. And so since as a day trader, I'm averaging right now about $20,000 a day, for me to average even $5,000 a day with options trades, I would have to be taking some fairly large positions. We know that most options expire worthless, so there'd be a lot of risk there. Even if I did cash secured puts or I did spreads, it's just another thing to focus on. So this is where I think it's good to try to be a specialist in your strategy and not try to do a little of everything. It takes sometimes doing a little of everything to learn what you're good at and what is easier for you. For someone else, doing weekly options contracts for covered calls or cash secured puts could be a great way to make a little money, and that could be less stressful than trying to actively day trade the way I do. So it's not to say what works for me works for everyone, but that's just, again, just to answer your question of why I don't trade options more. I think day trading, Vicky, does require a high degree of mental strength because you get knocked down so often. We all do as traders. We get knocked down, we have to get back on the horse. If you have 10 green days and then in one day you lose everything you just made, it takes a lot of mental strength to get back on the horse that next day. And so I think that, yes, day trading does require a very high degree of discipline, a high degree of mental strength, a high degree of emotional intelligence. I don't think that I'm not, even where I am now, as solid in some of those areas as I'd like to be. And I've been doing this for a long time. So it brings into question for me whether I'll ever get to the point of having just like impeccable discipline and I'll never chase a stock that's overextended. It's very hard. It really is. It's a big challenge. Trading, it's fun, but there are certainly times where it feels very stressful and it's not a lot of fun. So I think that you have to have a passion for it, and that passion is what will keep you going through the frustrating times. For me, having an amazing year like I had last year, you'd think, well, gosh, this guy's got no reason to ever be bummed out about trading. He's, big picture, makes good money. But, in these little windows where over the course of 3 days I have 3 big losses and give back 25-30% of what I've made in the previous 15 days, whatever it is, it feels you feel defeated. You feel you've just gotten kicked in the face. So it doesn't matter how many championship rings you have or belts you have or whatever it is. When you get knocked down, it hurts. And it's not fun. It doesn't matter what level you're at. It's not fun. So, but I really do. I enjoy trading, and more often than not, trading is gratifying because the market, more often than not, at least the way I trade it, is produces profits. So momentum trading, buy high, sell higher. That's my strategy. I'm aggressive, and if we do go into a long sustained bear market or something like that, or not even a bear market, but we just see for some reason trading volume decreases significantly, if we saw, I don't know, some new regulation, the financial transaction tax, stuff like that, that could change the market, I suppose, but those are all ifs, and you can't just spend all your time thinking about that. So right now the market's hot. I'm going to keep trading. I'm going to be aggressive. I've got my small account challenge starting in a week. Those of you that want to learn a little bit more about day trading, I'm going to give you a link here. Let's see. Where is it? I'm going to give you 2 links. I'm going to give you one link right here to check out the small account challenge that I'm going to be starting in about a week. Let's see. And I'm going to give you another link if you'd like to attend the replay of my last workshop, my free day trading class, I'm going to give that to you right here, and I'll just pin that to the comments. So you could actually watch that today if you wanted to at 1 p.m. Eastern. It's the replay. So that replay runs right now every day, and while it's running, we're still inviting students to join our classes. So we would love to have you join. I mean, I'm obviously biased about Warrior. I think we have a fantastic curriculum. We've got the Warrior Starter class, which is our introductory day trading course. And we have the Warrior Pro course, which is the sort of flagship class. It includes the starter, but also includes all of my advanced strategy development classes. And we had a phenomenal winter school program that we taught just this last year. Recorded all the classes, so all the classes in there are brand new, and they just came out so well. So you guys, I think, are really going to love that. Many of you are already students, so I know you're tuning in here today, but so thank you for tuning in and your comments on your experience in the classes. But we really try to go above and beyond to give you guys great experience, and we've been able to develop a fantastic community of traders who are all looking at the market in a similar way, looking for momentum, and it's a really awesome community. So I know you guys really enjoy it, and I enjoy tuning in every morning and seeing you guys. So thank you for that. All right, so I hope you have a fantastic day. I'm going to let you go. We've been streaming here for a little less than an hour, so this has been a nice broadcast, but I'm really looking forward to seeing you in the chat room. I will be broadcasting tomorrow morning, so make sure you've got your notifications turned on, you've subscribed to the channel, and hit the notification bell. So I'll be broadcasting my watch list each morning this coming week, as we get into the small account challenge starting the following week. All right, so any questions that I missed, you can feel free to ask them during my next live broadcast, which will be tomorrow, probably around 8:30, 8:45. Okay, thanks you guys. I'm gonna put my disclaimer up one more time, and I'll see you all tomorrow morning.